Welcome back, everybody. It's time to look for new positions and track some more transactions, so let's get right to it. Welcome back, everybody. Here we are logged into the web application MyATMM.com, and this is the third part in the series on selling cash secured put on Apple and getting assigned, and we tracked that in the last video. And in this one, we are going to sell a covered call on the options that we were assigned. And we're also going to play both sides. We're going to sell a cash secured put on it as well. Before we switch over to Thinkorswim, we need to get an idea of what strike price we are going to need to sell for the covered call that will protect our premium that we have collected already and cause us not to get, a loss that we are not anticipating. All right, so over on the cost basis screen, we can see that our cost basis without premium is 270 and our cost basis with premium is 267. So if we are interested in just breaking even to get out of this stock and move on to like another ticket or something, we don't care about losing any of the premium that we've collected, then we would need to look at selling a strike at like 268 or above. And then we will, get out of this clean. We, would have only pocketed like 70 cents. So that's $70 for 100 shares. But that's how that works. But if we're interested in just keeping this entire 267 instead, and selling, or sorry, not keep, keeping 270. That's interesting how the numbers are so close together. So it's a little misleading. But basically, if we're interested in keeping all of the premium, we will need to look at selling covered call strikes at 270 or above. So that's what we are going to do. We're going to look for selling a covered call at 270 or above. So here we are on Thinkorswim, and we currently have Apple selected right here. You can see it own the 100 shares. We need to come over to the trade tab, and we are looking to sell a covered call at 270. And as you can see, we're already kind of in the money a little bit at 270. I'm going to keep things simple because all we need to do is sell it for 270 or above, and we will be, in the green. We won't have lost any money. And we are doing this for option premium cash flow only. We're not really interested in capital gains. If you are, you can easily, obviously, sell a higher one if you want. If that's your, strategy, you can do that. It doesn't really matter. For this example, we're going to go ahead and just keep it at the money because we're only into it for 270. So that's all I really care about getting back out of it. Cool thing is since it is in the money, I will collect a little extra premium because it is that way. So what I need to do is left click on 330, and you can see the midpoint is actually like 335. I'm going to go ahead and up that to 335. I'm going to go ahead and click confirm and send. We're going to sell this covered call on Apple at the strike price of 270 for the virtual upcoming Friday. So we're going to click send. That filled right away. Now, something else I want to do is I want to turn around and sell a cash secured put to play both sides. And I'm actually going to go ahead and do that right at the money at 270 because it doesn't, I mean, normally it's usually a little lower, so I'll sell it to 267.50, but it doesn't hurt to go ahead and sell it right there. We're already in it at 270 anyway. But yeah, so basically, if the price goes above 270, we will get called out on the cash on the 100 shares that were assigned. So we'll get rid of those, and this will expire worthless. So we'll just collect that as free money. And I mean, playing this continuous wheel strategy by playing both sides when you're in the position, it allows you to, double up on the premiums. Our ultimate goal is to get out of the stock. We don't want to hold on to it. If your strategy is to hold on to the stock, then obviously you would be selling further out of the money. But I am focused on just collecting the cash flow, just collecting the premium, in and out as fast as possible. So left click on this to sell the cash secured put. We're going to up it a few pennies to try and get to the midpoint. Go ahead and click confirm and send. And that filled too. All right. So right now we are into Apple for 100 shares. We have, we've sold a cash secured put right here, and we've sold a covered call right here. So we've collected basically double the premium. What we need to do now that we've done this, and you'll see that this expires virtually in the November 14th. We're setting on the 10th, which is a Monday. So that coming Friday is the 14th. What we need to do now is go over to the web application and track these transactions. And as you can see, it shows that buy of the Apple stock. I had to buy it to simulate the assignment because in on demand, it doesn't put it over an account statement like it should. That would make things a lot easier. So anyway, we need to go over to the web application and track these two transactions. We had already tracked the assignment in the last video. All right, back over on the web application, we have Apple selected. We need to record those transactions of the cash secured put and the covered call that we sold. So what we want to do first is to click on new position. And again, we're simulating that. So I believe is back on November 10th. So we'll pick November 10th. It was a sell to open and it was a call. We did one contract. Expiration is that coming Friday. So that would be on the 14th. And the strike we did it for was 270. Right? Okay, and the price that we got for that covered call was 355. So again, this is in the draft position. As soon as we click save, it'll move into the calls group. So we'll click save. It moved into the calls group. It also saved down to the preemptive staging area for the transactions. And again, it pulled in my defaults of 50 cents and a penny. So you can expand that if you want to see it. And we will press this helper button to get it down there to do the pre-calculation of all the premium. We'll click add transaction, which adds it to the permanent transaction history. And now we also need to do that cash secured put. So we'll click new position again, change the date back over to November 14th. It was a sell to open. We did a put. There's one contract. The expiration again was on the 14th. The strike we did that for was 270 as well. The price that we got for it was 219. Then click save, and that'll move it into the puts as soon as we do. And it did. So we can see that position in play as well. And it also copied this upper staging transaction area, again, pulling in the defaults that you had set. And I just remembered I forgot to show you the preferences screen. So I will do that here in a second. Hopefully not forget this time. But anyway, so we need to press that helper button, pre-calculate it for us. Again, click add transaction. So we went through that fairly quickly. So you can see it went through, added the transactions to the permanent transaction history. So now we have a total of 4 transactions that we have done on this ticker. The initial cash secured put, the assignment, the covered call that we wrote on it, and then the cash secured put that we also wrote on it. And again, by doing that cash secured put, that second one, it did double up our collateral. So now we're into it $27,000 for the purchase, but we're also into it another $27,000 for collateral. And you can see up here, the summary shows you that. It shows you the 100 that you own, that you bought for $27,000. And then it also shows the 100 shares from the puts, the new cash secured put that we just did, and showing the collateral for that as well. And then we still have our cost basis is here, and you can see the cost basis with premium has gone down even lower. Well, actually, with puts, it's about the same yet. We have to wait till the transaction completes. But the total credits, you can see we've pulled in $843 total so far. So that wraps it up for this video. In the next one, I will show you the overall result of how this transaction played out if it went above 270 and we got called out, and you know, what the overall premium, profit and loss, and everything is after that point. So I will see you in the next video. I want to thank you for watching. Like and subscribe if you haven't already, and go out today to MyATMM.com and get your free account so you can start tracking your own transactions. Thanks, and I'll see you in the next one.